Good morning, everybody. It is 9:19 a.m. Monday morning, July 12th, 2021. I'm going to try to drop a couple videos today throughout the day. I'm going to try to kind of compartmentalize and make them a little shorter. I keep saying that, and I always get caught up rambling. I'm just trying not to make you guys sit through 20 minutes of overload every time. Feel free to leave some feedback in the comments if what you guys think an ideal video length would be and all that kind of stuff. I'd love to hear from you guys. So anyway, Ghana's central bank to pilot CBDC in September calls it cash on its own, and that is very contrary to what a lot of people have been saying. While no date has been given for the launch of a digital, I don't know if that's CDI, the deputy governor said its success would determine the next steps. It's pretty interesting. Digital currency is part of the central bank, acknowledging the need for digital payment and digital delivery of financial services, the deputy governor said. This is formally to get into that space and to be able to provide a platform on which we can add more value to digital transactions. It's cool stuff. Crypto bank Kasha could become a savior for Indian exchanges on debut. Kind of what it's talking about here is it says here that the crypto exchanges have been struggling to offer seamless services to customers because of non-cooperation by the Indian banks. So a lot of people over there are stuck doing peer-to-peer stuff and all kinds of third-party activity, which just incurs more fees and slows things down. While they're waiting on regulation, this has all been announced, and they said, we will be coming to India next month. We'll be launching a personal bank account so the personal traders can do peer-to-peer trading. Cryptocurrency traders will be able to transact without fear of their bank accounts being frozen. We have done a lot of work on it. We have taken stakeholders' inputs. The cabinet note is ready. We have to see when the cabinet can take it up and consider it so that we can move it. From our side, I think one or two indications that I have given is that at least for fintech, experiment and pilot projects, a window will be available. The cabinet will have to make a decision. So in short, in the span of 1 year, Indian has shown a drastic hike in crypto investments with approximately 19,000% rise in the crypto investment space, indicating support from both the government and the citizens. India may be big news for the crypto community, as long as they don't ban it again next week. Worry, I don't know how you say that honestly, becomes latest major Korean bank to announce crypto custody services. An increasing number of leading South Korean banks are establishing joint ventures with minor ownership to enter the crypto custody market while complying with local regulations. It's cool stuff, man. In overseas markets, the digital asset custody has become a successful, established practice among the new services offered by the banks. That's because crypto is here to stay, folks. Australian online broker Self-Wealth is now offering crypto trading. Their move into crypto investment space falls in line with the company's efforts to shift from a pure share trading platform to a wealth creation platform. He says here they will partner with an established and secure cryptocurrency exchange to offer crypto trading on the platform. This is off the back of research we've done, including answers from many of you. You want to access crypto, but you want it done in a safe and secure manner. You will be able to trade cryptocurrencies that have been vetted by us first. Australians have decided that cryptocurrency is here to stay and are looking for trusted platforms to facilitate their investment decisions. Oh, it's coming, guys. Big stuff on the way. Crypto and blockchain venture funding soars 2021 second quarter. The amount of venture funding directed towards crypto and blockchain projects and companies jumped during the second quarter of 21. As noted in this by the Block's research, a total of 497 related venture deals occurred during this period. When excluding the $9.7 billion capital inject by Block One into the crypto exchange venture Bullish, the second quarter saw $6.2 billion in private funding directed toward the digital asset industry, as shown in the chart below. That is approximately a 90% increase quarter over quarter. It's pretty awesome. The bulk of the deals that took place were in the form of early stage and seed deals, accounting for 171 and 202 respectively. Crypto financial services companies and infrastructure focused companies drew the most venture interest. Imagine that. The OK Group is to work with Nanjing police on anti-money laundering blockchain. Despite a crackdown on crypto mining, Chinese authorities are still bullish on blockchain technology. It says Chinese police authorities are very motivated to bust crypto scams and track illegally obtained funds because they can make money for their departments, Chinese reporter Colin Wu noted on Twitter. Interesting stuff. Another thing that China's doing using blockchain is giving out $40 million of digital yuan in red envelopes to boost adoption. The experimental implementation of the digital yuan, the central bank digital currency, is moving forward quickly in Japan. The project is now in its 8th year of development, including large-scale experiments across the main and cross-border tests with Hong Kong. It was first announced in 2014. I knew that it had been around a while. I just had not seen anybody actually say 8th year of development. That caught me off guard right there. China speeds up adoption. They're taking regional development objectives into account. The two pilots have made tremendous progress. They're selecting merchants in this business district and online marketplace. The Beijing Winter Olympics food, accommodation, transit, travel, commerce, entertainment, and information scenes will be there. Something they're hitting real hard from what I understand. Over 30,000 merchants in the city are now trying to implement the digital yuan payment capabilities. The pilot has attracted 11,000 retailers. I mean, it's growing pretty fast. They want to see what this thing's going to do. I think everybody's watching right now. I saw this article. This is definitely worth taking a read. It's crypto staking rewards and their unfair taxation in the U.S. And it says that the IRS appears to be blinded by its own enthusiasm on crypto taxation, instead creating an excessive financial burden. At no time in tax history has pure creation been a taxable event, yet the IRS seeks to tax new tokens as income at the time they were created. This is an infringement on traditional tax principles and problematic for several reasons. And then it just goes in, there's a new lawsuit underway in federal court in Tennessee challenging the IRS's taxation of staking rewards at their creation. Joshua Jarrett, the plaintiff, engaged in staking on the Tezos blockchain, staking his Tezos and contributing his computing power. New blocks then created on the blockchain and resulted in newly created Tezos for Jarrett. The IRS taxed Jarrett's newly created tokens as taxable gross income based on the fair market value of the new tokens. Jarrett's attorneys correctly pointed out that the newly created property is not a taxable event, that it is new property here. Here, the newly created Tezos token is only taxable when it is sold or exchanged. Jarrett has the support of the Proof of Stake Alliance, and the IRS has yet to answer the complaint. So, you guys should read this article. That's not financial advice, but it is important if you hold crypto. You should know what the taxes are going to be like, because some of you guys could get wrecked if you're not paying attention. I think it was Real XRP Boy posted this, and I somehow don't have that tab open, but this is a Global Payments 2020 Transformation and Convergence article that was put out by BNY Mellon, obviously in 2020. There's all kinds of interesting stuff in here. I don't know, some of you guys might be bored with this. I have a hard time actually reading word for word, but I do skim these things pretty thoroughly. And one of the things that I did see, they have a lot of infographics and stuff in here that are interesting. Something that they were focused on in here, this graph right here was interesting to me. It was kind of like their agenda, pretty much. That's what it looks like to me. And what I just thought was interesting, the Basel things going on with gold. The global thing is mobile payments, contactless cards, ISO 2022. We're going to be going over that in a couple videos too. E-voicing, e-government, the e-government just sounds like a remote thing to me. I gotta look into what that term actually means, but intraday liquidity regimes, anti-money laundering and anti-terrorism funding, International Payments Framework Association, transforming checks, foreign account tax compliance. I mean, you're just seeing a lot of this stuff, and it's happening. There was something else I saw in here too, if I can find it, that I thought was, I can't remember what page it was on. I'm not going to spend too much time on it if I can't find it, because it's a long article. I saw something. I had a little thought, but I can't find the graphic that I was looking at when I saw it, so I'm not going to worry about it. Oh, there we go. Here we go. I did find it. They talk about market participation. Excuse me. It says the market's clearly in a period of significant transformation. Some banks appear to be retreating from the commercial and corporate payment space in response to regulatory and economic pressure. There's growing interest in the sector from non-bank providers. They may begin servicing retail clients, but will extend propositions to SMEs as the payment delivery becomes increasingly commoditized. It says technology companies will become a more significant player in the global payments business because they look beyond the payment transaction to what has happened commercially. They're very good at flow charting business processes and truly looking at what happens on either side of a payment. We may find that the payment providers in 2020 will operate more like technology companies in this respect. And then they go in to talk about interoperability, which is the biggest word in the digital asset space, in my opinion, right now. It says there will be a significant convergence between expectations and capabilities and in the quality of scope of solutions available across the markets. Interoperability will be a core aspiration across regions despite the differing pace of development and leapfrogging advancements of emerging economies. Technology adoption, the interoperability of infrastructures across markets, and the increasing engagement of non-banking providers will combine to enable the creation of global payments platform providing 24/7 service on a near real-time basis across multiple currencies, geographic regions, and markets. And I'll tell you, yeah, we already know about that on this channel. Two significant themes will define the next major evolution for the payment industry. The first will be convergence of non-bank payment infrastructure into bank platforms, and the second will be sophisticated proprietary decisioning software that chooses the most effective payment route, currency, delivery date, and time of day, etc. And I thought that was really interesting because that sounds like, getting a little more on the autonomous side, which I think is really interesting. And this whole thing, talking about the global payments platform in 24/7 real time across multiple currencies, regions, and markets, it sounds like the Internet of Value. I just did a video of it again. It does not say Ripple, I don't think, anywhere in this for the record, but just saying. Let's check this out. This guy's talking about the token taxonomy act, and just listen.
Changes. We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that.
We're not going back. We're recovering to a different economy. Just hold on to that as we watch all this and go through these next couple clips.
Is more leverage to technology. I mean, I think you'll see more telework. You'll see probably the acceleration of automation. All of that was in the process of happening, but you're going to see much more of it. And I guess that for me, the main takeaway from all of this is that even after the unemployment rate goes down and the economy is, and there's a vaccine, there's going to be probably a substantial group of workers who are going to need support as they find their way in the post-pandemic economy, because it's going to be different in some fundamental ways.
I think it's really important to look at this bill as essentially it just creates the clarity for innovation and for competition and for lots of growth in the industry, instead of actually putting a lot of regulatory control around it, which is what I think we harken back to the early days of the web, that's essentially what the government did then. It restricted itself from actually creating all of these regulations around how the web was going to develop. And when you think about a decentralized network, and particularly those that are focused on the permissionless and very similar to the web architecture, that's a public good. And very much in the same way that we are used to now thinking of the internet. When I was at Mozilla, we talked about it as it's not just a public good, it's a public right for us to have access. And so it's just an interesting, and that's what I think the Token Taxonomy Act is really trying to do.
Yeah, it basically says, look, no matter if you get it right, if we get the definition on security right, no matter how badly the SEC wants to come and deem you a security, if you meet this criteria, they can't. So then you can have certainty about your product. On the other side, if you can't meet that bar, well, then either change your product or your path to launching is through the SEC.
So that's really good stuff right there. On TV now, somebody shared this to Backup Bradley, Brad Kimes over Digital Perspectives, and they're talking about the private capital that can be mobilized for emerging markets. We need to rethink the way international financial institutions can support low-carbon investments at scale. He said of the two organizations established 77 years ago, in the waning days of World War II, we need a financial system that isn't built around bank balance sheets. Moving forward on that, venture arm of Thailand's oldest bank says DeFi will disrupt traditional finance. It says, I think traditional financial companies like us should actively explore, invest, and adopt DeFi. And I think he's right. And the reason why I think he's right is because it leans into this, which is, I can't access this article because I'm not paying for the journal. But anyway, it says buy, borrow, die, how rich Americans live off their paper wealth. And yeah, so then it goes on and says rising stocks and rock bottom interest rates have delivered a big perk to rich Americans. Cheap loans that they can use to fund their lifestyles while minimizing their tax bills. Banks say that their wealthy clients are borrowing more than ever before, using loans backed by their portfolios of stocks and bonds. Morgan Stanley Wealth Management clients have $68 billion worth of securities-based and other non-mortgage loans outstanding, more than double 5 years earlier. Bank of America said it has $62.4 billion in security-based loans, dwarfing its book of home equity lines of credit. The loans have special benefits beyond the flexible repayment terms and low interest rates that on offer. They allow borrowers who need cash to avoid selling in a hot market. Startup founders can monetize their stakes without losing control of their companies. The very rich often use these loans as part of a buy, borrow, die strategy to avoid capital gains taxes. And this is something I've always kind of pushed with DeFi, as I was like, you have the ability now to borrow against your assets. You don't have to sell these eventually. Potentially, you can lock them up. And if you think about it, I mean, there's people that bought XRP, for example, at sub penny at one point, or 10 cents or something. And if it was worth $10, and you made a sizable investment before, you now have a ton of money. And instead of having to sell it, like, why can't you just have it staked, gaining interest, and that be what you live off of type thing? And you could still work a functional job and do all that, but also have assets working for you. And it kind of plays into what, the elite have available to them. I've seen some articles that reference these types of deals, and some of the interest rates are like they're not even a percentage. It's like 0.5%, sometimes even less, on millions of dollars. Now, I get that they're making that money back pretty quickly and stuff, but it's not available to people like me, that's for sure. And then that kind of pushes the narrative that I want to kind of get into here is, back in April, Janet Yellen said that week's IMF and World Bank meeting will be a Bretton Woods moment for the global economy. She just talks about all this stuff, and where does it say it here? Oh, yeah, it says, though it was a different time, I empathize with the enormous weight they faced, the pressure to come together after a global catastrophe and building an enduring and interconnected system aimed at promoting peace and prosperity throughout the world. Our current juncture is no less significant, and what we do in the coming months and years will have profound impacts on the trajectory of our country and on the global economic order. And that's true. And if you're not familiar with the Bretton Woods system, it was a monetary management system establishing the rules for commercial and financial relations between the U.S., Canada, Western Europe, Australia, and Japan after the 1944 Bretton Woods Agreement. It was the first example of a fully negotiated monetary order intended to govern monetary relations amongst independent states. Preparing to rebuild the international economic system while World War II was still being fought, 730 delegates from all 44 allied nations gathered at the Mount Washington Hotel in New Hampshire, Bretton Woods. And this is where they had their meeting known as the Bretton Woods Conference. They deliberated, they signed the Bretton Woods Agreement on the final day, setting up a system of rules, institutions, and procedures to regulate the international monetary system. These accords established the IMF and the International Bank for Reconstruction and Development, which is today part of the World Bank Group. The U.S., which controlled 2/3 of the world's gold, insisted that the system rest on both gold and the U.S. dollar. Soviet representatives attended the conference but later declined to ratify the final agreements, charging the institutions that they had created were branches of Wall Street. Imagine that. These organizations became operational in 1945 after a sufficient number of countries had ratified the agreement. And then in 1971, the U.S. unilaterally terminated convertibility of the U.S. dollar to gold, effectively bringing the Bretton Woods systems to an end and rendering the dollar a fiat currency. At the same time, many fixed currencies, such as the pound sterling, also became free-floating. So all the stuff around this is a really, really big deal, guys. Bretton Woods is what set everything up. And now it's pretty much, been over for a while. We all know that things have not been going that great as far as the global monetary system goes. These economies are just imploding right now. And what I found really interesting is I saw this, and this is scheduled for Friday, August 11th to 13th, 2021. They will be gathering at the same hotel as the original conference, and the realignment will gather the world's premier economists, macro analysts, and investors to ask, what is the future of money? So you don't get much more Bretton's Woods than this. I see like Morgan Stanley's here. I see you got Fidelity in here. Copper, which is doing a lot of stuff now. I've been seeing them all over the place. All kinds of people. It says here this is what they'll be talking about. The fiscal supercycle, petrodollar, changing the mandate of the Federal Reserve, critical misunderstood role of the Eurodollar, the withdrawal of the U.S. and overuse of sanctions, future of the dollar, role of Bitcoin in the monetary system, market structures, venues, flows, and liquidity, past, present, and future of banking, the case for CBDCs, and then organized leisure activities. Which, hey, fly fishing, we got golf, a little bit of horseback riding, a little tennis. $3,200. There you go. And if you get approved through application, then you get to go. Isn't that nice? So yeah, and then that just leads me back to what I talk about all the time, guys. Here's a dramatic ending for you for this morning's video. There's an urgent need for global stakeholders to cooperate in simultaneously managing the direct consequences of the COVID-19 crisis. To improve the state of the World Economic Forum has started the Great Reset Initiative. And you guys should take a look into some of this too. It's interesting stuff. It's a unique window of opportunity to shape the recovery. The initiative offers insights to help inform those determining the future state of global relations, the direction of national economies, the priorities of societies, and the nature of business models and the management of global commons. Drawing from the vision and vast expertise of the leaders engaged across the forum's communities, the Great Reset Initiative has a set of dimensions to build a new social contract that honors the dignity of every human being. And they're using COVID-19 as the catalyst, guys. Not financial advice. I'm not going to speculate. Just pay attention, people. And go ahead and give me a follow on Twitter if you guys don't mind at True Perception 3. They're starting to grow there too. It's catching up to the following that I have engaged in. Go over and make sure you like and subscribe. We got up to 190 now, so in a week, this casino coin community, mainly, that's who I think is responsible for this, has almost doubled my followers, which is awesome. I'm super happy about that. You can go over here and check out all my referral links. I do accept crypto payments. My crypto address is trueperception.crypto. It's offered through Unstoppable Domains, if you guys are familiar with that. They have a list of supported wallets you can send and receive from that just use this instead of a long string address. These are the assets I do accept. It would just help support the channel. Not a big deal either way. Here's all my referral links. Here's a link to my Twitter, and here's a link to my private Facebook group. I would love to see some of you guys over there. And I'm going to go help my wife with the kids. And yeah, I will see you guys this afternoon.